Matthew Cranston from the Australian Financial Review. Thanks for your time. I know you've been crunching a bit of numbers. It's yes, we understand that the coronavirus, a serious illness, and it's causing death out there. People are figuring out the cost though as well. The ASX is down 1.6%. Look, it's been very solidly up of late, but can we put a number on it? I mean, I guess it's a big unknown at the moment, but...
Yeah, I think a lot of people will be racing around to try and at least make some estimates on it. I've had a crack, but that's fraught with danger.
I like that.
But I was just working out total exports to China, 150 billion a year, which is roughly half our total exports, Australia's total exports. Then you work out, well, what's the total export as a percentage of GDP, and that's about 23%. And so then you sort of halve that, and then you appropriate that to what our annual GDP is. So it's, even if you take the worst case effect, it's going to be a big number if you take the worst case scenario.
And this is just China, of course. If it's a global impact and everything's sort of down, everyone gets affected, right? So.
Yeah, but the key thing is that they're starting to say that with Wuhan being a major manufacturing centre, that's going to have a big hit to sluggish growth in production, and so that will have short-term consequences for iron ore price. And you can see the iron ore futures have, suddenly collapsed. Well, not collapsed, but dropped. And
so because they were at, the price was at around 90, so the budget was expecting or factoring in 55. So how much lower are we getting down?
Once again, a good point. Even if you shed 5% off that, you're still going to be way ahead. But still, I mean, these things, you don't know where they're going to go. 80 people confirmed dead, and the kill rate, I think, is 3%. So everything that's reported, 3% of people that report they've got to die.
Yeah. So look, and that's well down when you look at, I think MERS was 35% fatality rate, SARS about 10.
Yep.
The concern with this one, if it's passing on, this is what Chinese authorities at one stage, the report was, it could be passed on without someone showing symptoms. So in that 2-week incubation period, which would be a nightmare. Australian authorities are saying they don't believe that's the case. And I guess that when you feed into markets, it's the unknowns they get worried about, right?
This is a good point, and you have to, and to be sort of fiscally, fiduciary responsible, you've got to take like the worst case scenario, and so a lot of people are doing that, and that's been priced in our 10-year bonds, right? So as people go to the risk-off scenario, they jump into safe haven assets like bonds, and overnight we saw a 12 basis point drop in the Australian bond yield, and that's under 1% now. So that's probably one of the best indicators.
For now, of some concern. Australian authorities saying it should be okay. So, look, we'll keep a close eye on it. This comes ahead of inflation figures for Australia tomorrow.
Yeah.
What are we expecting?
So headline will be, I think, as high as 1.7, but trimmed 1.5. So trimmed is the one that the RBA is always monitoring, which is still a very long way, Tom, from the 2 to 3% band. So still not seeing that... what they call in economic parlance, the Phillips curve really starting to happen yet. Got to get that wage growth happening before you start to see that inflation rise.
Yeah.
But there will be a few things that'll trigger a higher number. That'll be petrol prices, food from the drought.
Bushfire and drought. So that could be in future months. That could. It's not a good thing overall, but it has this perverse impact on inflation.
Yeah, and we're also net importers as well, so I'll just have to check, but surely the currency depreciation may have imported a bit as well.
Matthew Cranston, thank you.
Thanks, Tom.